Hello, Warriors. How's everyone doing today? Hi, Bran, Michael. Hello, Laura, Mavi. Welcome to F.A.C.E. Andre, Ryan, how are you?
Hey, Dale.
How's everything going, buddy?
All good, mate. All good.
He's almost on
Okay.
holidays. That's why he's happy.
Why? What holiday?
He's leaving tomorrow.
Where are you going?
Easter holidays.
Oh, okay. All
Yeah,
right.
okay.
So pound made a new high yesterday. Looks like it's reversing here. This divergence here. I'll tell you what. This looks very good. You know, it held this low, carved out a higher low. You know, this moving average served as almost a trend line. One thing I would say, I wouldn't short it. Okay, I think 134 is potentially the next target. Would you be a seller up there, Ryan?
I may well be. I think we're well in the throes of end of month stuff. The whole move started pretty much just before, over and through the Tokyo fix, and carried on going. It even carried on going up as Kuroda came out saying that they may be getting closer to achieving their 2% inflation target. You know, almost a complete flip comment from him, and the yen didn't even blink.
Okay, yeah, so it should have come off, and it's saying, you know, the market, it's not what's being said, it's how people are voting with their wallet. So
yeah, I think because we got a reasonable risk element this week, you know, there's been no more skeletons falling out of closets in the banks. There's no big data. There's been no big headlines. I think we're seeing a magnification of end of month flows because there's nothing else to trade, for want of a better thing. So it's going to could be a bit spicy the next few sessions until we get over that month end hump.
So if you and Stel held your S&P longs, congrats. What lit it up? What lit it up today?
The absence of bad data, right? Of bad news.
I know. I know Lululemon had some great earnings yesterday afternoon. I'm not sure what lit it up, but I'll tell you what, despite this rally, would everyone agree that Apple's a pretty good bellwether for the market? I mean, it didn't suffer. It doesn't suffer as much on sell-offs. It's made recent new highs. It's holding this triple top breakout, but I will say that if it takes out this breakout, it opens a door. So, you know, if you're trading the market, this is a very important chart. So it held it yesterday and looks like it's going to pop. You know, I mean, it was a test of a breakout. So far, it's successful. But if it's not, there's a problem for not just Apple, I think, but the general market. So there's something to keep an eye on, since, you know, look how well it performed during all the recent turmoil. All it did was go sideways. So,
good techs.
Yeah. So TLT, you know, 20-year. I know that Welch is going to try it around 103. If it starts taking out this gap, it's going to look pretty negative too. That's really that key. And one thing for precious metal bulls, platinum's really not leading still. It's really still lagging. Silver tried to make a new high yesterday. You know, we'll see if it's a failing rally. I think it's really like a beach ball. I've been watching it because I'm short, you know, and every time they try and take it down, it just, you know, doesn't, you know, you're most likely the wrong way in the market when the market going your way is like a struggle, and it just comes right back, and, you know, on very shallow pullbacks. But I'm going to put my faith on the yen to say that a precious metal correction is close at hand, because this means higher yields, and we didn't get to 370 yet on the 10-year. That's still 14 bips away. This has done nothing wrong either, unless it started trading back under 350. So looks to me like yields are on their way back up. Will they stick? I don't know, but I think that this is viable. And if you covered up the title, you would say, well, you know, we're going to get a 50% correction. And, you know, that's the way it looks to me. I was wondering what you guys thought about Aussie still, you know, the weak sister. I mean, is Aussie going to lead the way down and then bottom first? I think that is a possibility, you know.
We were talking about this one on the Flow Show because the Aussie CPI came in much lower than expected last night. And, you know, the bank calls, they're calling for a pause in April and then a hike in May.
That's weird.
So, yeah, that's exactly what I said. Now, whether they're factoring in maybe this banking stuff as, you know, just getting over that hump. But it is a bit of a weird situation in those calls. You know, if you've got reason to hike, you hike now, not stop and in a month, hike in a month's time. But
I think they're all guessing.
Yeah, they've all been guessing for the last 2 weeks. You know what it's like. We've seen rate expectations everywhere going haywire. 1 minute we're pricing cuts, next minute we're pricing hikes, next minute we're pricing pauses. You can't listen to it at the moment.
Yeah, have you ever you know, lived through a market period where, you know, it comes to a point where the market will react to what central bankers say for a day, and then they just go on their way?
Yeah.
I haven't, you know, I haven't seen a period like this. So
goldfish markets, we call it.
Why? Because they get flushed down the toilet when they die?
No, because they got the memory of a goldfish.
I'm sure glad I'm so
That's
smart.
a Ted Lasso thing.
Is it?
You got that from Ted Lasso.
No, he invented it. Can I tell you guys something? Some guy followed me on Twitter, and in his, you know, in the profiles, in his profile, he says, inventor of Turnaround Tuesday.
What?
Yeah, that would be like saying, hey, you know, I invented Saturday. But anyway, he's the inventor of Turnaround Tuesday. Isn't that something?
That is something. I'm actually surprised you read people's profiles. That actually surprises me more.
Okay.
What's that?
Yeah. Well, you know, that's how I guess.
Yeah, that's true. No, I'm talking about people that follow you.
Oh, yeah, that's how I get guests too.
Oh,
yeah.
Hey, good morning, guys. How's everybody doing?
Morning, Blake.
Hey, good morning. So Ryan's going to be out for Easter holiday. So Ryan, before you leave, you know, and you're leaving tomorrow. I'm assuming tomorrow morning.
Yeah, very early.
So what knowledge can you, just give the traders trading around end of month and end of year flows? Because I'll tell you, my trading has been less than spectacular this week. However, I'm proud of myself for not adding on to any losing trades, because I've taken some small positions, but I've refused all week to add to anything. I just have my stops in, and if I get stopped out, like I got stopped out last night in a position, I just get stopped out. It's, you know, it's just, you know, I kind of dust myself off and continue on. But what kind of knowledge can you pass on to the traders?
Yeah, the same as you. We were talking the other evening. I was long Aussie yen 87.35, and I got freaked out by that breaking dollar yen through 130.50 yesterday and closed it off for minus 10 pips. And here we are, 100 pips higher. So I get exactly where you're coming from. But for trades, I'll just repeat what I said on the Flow Show. You know, right now it's very difficult with this because of lack of news, lack of headlines. The market has got nothing really to trade, so it's going to be trading end of month. That means these moves can be exaggerated. If you're not sure about it, the one thing I would say is note the fundamentals, note where we're at with the fundamentals, and if you see prices moving outside of the fundamentals. You know, for example, we know that the Fed's may be going towards a pause. So if the dollar rallies stupid amounts, you know that's pushing it outside of the fundamentals. That's the sort of trade opportunities you want to look at. You know, euro getting slammed down when we know the ECB are continuing to hike, that sort of thing. You know, going against the grain if prices move to extreme levels.
Yeah, and they are, and actually, K-Man had some wise words regarding the yen. I mean, the yen. I'm so happy. I was so aggressively long yen, for the last couple of weeks, up until last week, and I mean, we're seeing a pretty big reversal in the yen. So, K-Man, what are your thoughts with Is he here?
Yeah, I'm here.
Yeah, hey, K-Man, what's your thoughts as we go into fiscal year end with the yen? And Dale, I can take over the charts if you want me to.
Go ahead, buddy.
Okay. First of all,
I like watching the F.A.C.E show.
I think when we look at the equity moves of the quarter, at least, I haven't really looked at the yearly, but that looks a little logic to me what's happening. But then what all those bond market flows have been really muddling the whole picture. But it's a fact that now twice, especially today, but because we were trading value date month end and fiscal year end, we've seen this big move in yen, which is a seller. So I wouldn't bet against it until Friday, but it can still go both ways, because the big Japanese accounts, they will trade until the last Tokyo fixing. Okay, they will trade until Friday early morning in Europe, and late evening your time. So basically anything can happen, but the expectations that some banks had on what to be done is already gone down the pin. Into the bin, because they were actually thinking that yen should be bought, but that doesn't seem to materialize. Where it can go to, we have seen the move overnight. They've done like what is it, 100 or so pips in dollar yen in the space of the fixing. Don't discount any more of those things. If you look at it technically, we've broken through some. There's another one which could be an inverted head and shoulder. If you take it from 129.65 to 130.65.80 or so, we could actually see 133.80 before the month is over on the dollar yen. But
K-Man, I appreciate you bringing up the inverted head and shoulder pattern. You look at the Canadian yen. I mean, we've got one developed here quite nicely. So it's like almost universal where you got. And by the way, I don't know if you guys noticed the sterling yen. We're right up against triangle resistance right now. I mean, this is these moves are.
Take the shorter term, it's breaking out. If you take it,
if you do this, yes,
it's gonna.
Yeah,
and that was a 3-point line.
Yeah, it's trying, and after the false breakdown here, I mean, hell, we can get some exaggerated moves. We're seeing, some moves out of North America too. There's some pretty strong like dollar moves. I look at the US dollar Norwegian krona, real big pivot off of some trend lines. Dollar CAD, we're hitting some support. I think crude oil is having a little bit of an impact of what's happening there. But what do you guys make out of like the pound? I mean, the sterling just had a little false breakout here. I don't know if I really trust technicals going into end of quarter, but we do have a little bit of a reversal here with divergent relative strength. Stelius, we haven't heard from you. What are your thoughts here?
Okay.
Sorry, I was muted. I was speaking and I was speaking to myself. The pound.
It's like I felt like your wife there for a second.
We are
like I muted you. Yeah.
The pound's the pound's done well in the recent days. I think we're getting to levels where I would like to be seeing trying shorts. But the problem I have is that cable is edging up towards this channel resistance. So you showed that. Did you show that? Well, if you take the December 13th high, you know, and where are you? There you go. It's basically, it looks like a channel that we're edging out towards resistance. You know, it is toying with that, and I want to see how that resolves before I try to short it, because if that breaks out, then technically it's going to be there you go. I mean, if you join that December high, something like that. So we're at that. I mean, it looks like a good risk reward short there, but you know, I'm considering shorting that, but stop has to be very close. I think it's all about the quarter end flows now. And I said yesterday, I think it's going to be risk on, grinding slowly higher. And this is exactly what we're seeing in the absence of any bad data or bad news from banks. And I think this is going to continue for the next couple of days.
Yeah, so you know, here we are. And by the way, you were just talking about this channel resistance, and Dale, the gentleman you're interviewing today is Dick Matthews from Partis FX. I actually just interviewed him yesterday over at Trader Summit, but he's probably got something to say, and I think he's listening in right now. He's probably got something to say about the sterling, about the big resistance coming up. So that Stelius was just mentioning. But Stelius, you've been spot on with this you know, stock market grinding higher, you know, the pain trade. You know, I just looked up and I saw Tony's comments. I've lived through every market since 1998. This is effing ridiculous. And you know, any market that's grinding, it always feels ridiculous. I've definitely been on the wrong side of those markets, you know, many times in my career when, you know, the markets are like this, they just kind of grind higher. There's no news. You know better than to short a quiet market, right? I mean, that's like trading 101. And I don't think that I don't get caught doing that. I mean, we all do, right? It's one of those like, oh shoot, I'm short and I shouldn't be short. There's nothing happening. There's consistent, insatiable flows coming into the market from every retirement account globally, nonstop. That's why stocks never go, you know, they never go down for more than, you know, an extended period, more than a short period of time. So you get stuck when the fundamentals don't make sense. It happens, right? And it does happen in these types of markets. And Stelios, you pointed out right. It was like totally set up for that this week. So here we are. Can we go higher?
Yes. The problem is when a trade makes a lot of sense and it's very popular, is usually wrong. And we talked about CTA positioning being record shorts in years. And, you know, all this fear about banks and, you know, the whole thing not manifesting itself in any kind of contagion at the moment, I think a squeeze is getting more and more likely, and we're seeing it already. Obviously, there can be, you know, black swan events or headlines or something happening. That's a different story. But going into quarter end, I think we go higher.
Yeah, I mean, wouldn't it be just like this to see us like, I mean, this is the daily chart, right? So here's a 50 DMA, you know, spike up to 4,100, you know, hit some of this resistance that's up here. You know, we could theoretically be in some sort of descending channel that looks, you know, whatever it looks like, but you know, we could probably hit some resistance up here, just enough to piss everybody off, right? I mean, that's what markets do that best. They do. So they tend to try to catch as many people offsides as possible, squeeze them out, and then reverse. You know, I wanted to ask really quick, K-Man, since you and I we tend to focus a lot on these EM currencies. You know, the dollar MEX has slid, but we're seeing a bit of a reversal here in the peso today. I was actually just glancing at the Euro MEX. You know, I haven't really done anything, but looking at the Euro MEX, trying to gain some foothold. What are your thoughts about the peso here?
It's a bit a strange one, because I don't really understand why exactly MEX is stronger right now. But it also feels to me, if you look at this week's moves, that it's already end of month, end of quarter playing, and then As we have said already a couple of times, no more dead bodies were falling out of wardrobes is probably helping the mix as well.
Yeah,
I'm really,
go ahead.
don't really want to get involved in much in the mix right now, but I'm very interested to looking out for what's going to happen in April, because if this continues to strengthen, and we have Banxico, by the way, tomorrow. But if this mix continues to strengthen, I don't know where it's going to stop in the new quarter.
And Banxico tomorrow, I didn't have it.
Expected 25 BPs to 11.25%.
11.25%. I
Right.
mean, that's oh, here it is. I was trying to find it. I see it. That's crazy, right? I mean, 11.25%. What other central bank has got rates at those levels?
Well, apart from the really small emerging markets, I don't think we find anything, especially not in a country that is so close to America and being one of the manufacturers of the US. It's a unique situation, and I think that's also behind the reason, one of the reasons why the mix is so strong.
Yeah, it is. So just a little. Oh, I was going to ask you, since we are chatting. Dollar rand continues to hold up pretty well, surprisingly. I'm conflicted about. Well, technically, it's very easy to read. It's like we got this little channel and it's following it. But looking longer term at the dollar rand, I mean, it is really kind of holding up pretty well. Despite everything that's happening. Do you have any feelings here?
Yeah, I was saying this morning in the room, this is what I'm keeping a very, very close eye on, because the 18 level is holding rock solid right now. And I'm actually thinking that if we would get a sell-off in dollar mix into the end of quarter, to try and perhaps go the other way around. Again, I really have very, very little confidence in what's going on in South Africa right now.
All right. Well, and just showing everybody, this is like our chat room. This is our general chat room. This must be where K-Man's comments are at from earlier today. You can see this is just from today in the general chat room since European hours this morning. You can see it, and that's just the general chat room. You got trades room, you got Flowonomics room, which is your macro chat room, which we'll be missing Ryan there this next week. You got your S&P indices room. So make sure you get inside the and that's where you can see Paul Franco. He's there. Make sure you jump in the ForexAnalytix community to be involved in these conversations. All right. Well, thanks, K-Man. Appreciate that update. Steve, are you here?
Scuba Steve
here. That's you guys have to see Adam Sandler.
I saw that. I
did.
Yeah.
What did you think? Did you laugh? When he said Scuba Steve, did you actually laugh?
Of course.
Big Daddy?
Because of what you say.
Yes.
Anyway.
Yes.
Hey, Stel.
Yes, sir.
What branch of service is general chat room in?
General what?
Chat room.
Nice.
Army, Navy.
That's not even a dad joke. That qualifies as like a granddad joke.
That's a major disappointment from you. Oh.
Well,
just a little observation with the euro. We popped above the 618. We popped into new highs. One of the things that if you get ForexAnalytix updates, you get these. Whoops, not that one. You get these intraday updates. RSIs are divergent, so you could see the euros. It's kind of weighing on the euro. We have this ascending channel. This is just intraday stuff, guys. I think you got to watch as we approach like 108.25. It's going to be pretty important support, I think, as we go into North American trade. For those of you guys that are trading the dollar FX right now. But I didn't hear Steve because we were saying Scuba Steve and didn't hear Steve. So we got just a few minutes before Mr. Matthews from Partis FX comes on. Any thoughts from you, Dale, like about the markets before you meet with
102 Dixie Battleground. yen acting better, carved out a higher low. I like the action in the yen, Blake. I think that, I don't even want to say where I think it'll go. You guys will want to commit me. So, but I think there's a big move coming there. Stay long by dips. It's 134, take half off, and I think it's going to break out over 34. So
You
there's some
know,
pretty good measurements.
so we got the 50 DMA coming up,
Maybe
and
it's
right
because
around the
of
38.
melt up. Maybe
Yeah,
because
well,
we're going to
it
have a
could,
melt
and
up.
that's exactly what K-Man was saying. Is we could have like a nice little melt up in the markets, in the yen pairs. So I think you got to watch them. I'll be watching very carefully as we get towards 133. 133 is where I'm now interested, and that's just because. And I know K-Man feels different about this. I do think that Ueda is going to be the big reformer, and the reason why I say that is because the world has changed, and I'm saying that just like is in general. We are in an inflationary environment globally. Even Japan's feeling it. So I think that he's going to by default he's going to have to be more of a quote unquote reformer. He's going to be taking the head of the BOJ, and like I said, he has yet to really show his colors, and I don't think we will see it, at least for the first month. But the point I'm trying to make here is I'm actually a longer term yen bull, meaning that I feel that the dollar yen will be traveling lower over a period of time. But
my pendulum has swung that way as well after the comments last night from Kuroda and Uchida. A couple of the others.
Okay. And let me just say the reason why I say that is just because I am starting to be interested as we get up in the 132 to 134 range. But anyway, let's hear your comments. You and K-Man, what do you guys have to say about that?
Well, and as I was saying, I was the opposite. I think he's going to make the yen move. That's what I said, right? He's going to make the yen move because when Japan moves, the market will have to rebalance some stuff and will move, because moving, whatever the Bank of Japan moves, is going to be a big thing. But then I think in the longer term, he's too close to the government to really let the leash go. And then I think in the longer term, anyway, my ultra long-term view is that dollar yen goes to 200 at some stage. But I think it's going to be short-term gain for the yen versus longer-term pain.
Okay. And this is kind of like, and this is my kind of technical guide on a weekly basis, what I'm looking at the yen, and whether that comes to fruition or not. And this for a move like this to happen, it's not going to happen overnight. This is a several month, if not year-long process in the yen. But Ryan, you just said there were some comments last night, not from Ueda. That was from God dang it, what is his name? Shoot, we can go back and find it, but you can go ahead and say
Kuroda came out and said that that they're getting to a point where, or they've never been closer to a point where they can achieve their 2% target, something along those lines. I can't remember the exact comment. Uchida was talking about yield curve control, and that again, that may be something that they need to get going, and the market has a issue pricing that properly and that sort of stuff. And then we had PM Kishida coming out saying he's going to work on 3 pillars of new capitalism, getting wages up, skilled workers. So it's all, particularly from Kuroda, they were largely hawkish comments in terms of how he says things. And as I said earlier, the yen didn't move on that. So that's why I'm thinking, get a big decent rally in dollar yen into month end. I may be looking at getting into some shorts on that as well, because as soon as we're over the month end hump, we're going to be switching to what the Bank of Japan is going to be doing. And if the market suddenly goes back to those Kuroda comments, we could be setting up for another move down.
Yeah, and that's what you were saying about these month end, year end, quarter end. I mean, and as K-Man pointed out, this is your fiscal year end for Japan. These year end flows, or any flows, they're just dominant, and people need to get them done. Traders on desk need to get them done and fill them no matter what. But once you get past those flows, that, headlines like that do matter. I mean, and so that's exactly what Ryan's saying here. So, hey guys, I want to say thank you, gentlemen, ForexAnalytix team for being here. I know we have Mr. Richard Matthews of Partis FX is joining us with Dale, and I've been meeting with Dick. How long have we been hanging out now? Maybe a year and a half or so. 2 years.
I'm a big fan, by the way. Really nice guy as well.
Yeah, very
I
great
can
guy.
hear.
Oh, there he is.
Here I am.
Hello.
I can hear all this. Good morning, Stellis. How are you?
Very well. Thank you.
Good. I'm glad to hear you don't need subtitles. You've got Ryan on there, so you've now got two cockneys that you don't have to subtitle.
Do you need me to translate what Dale says to you?
Yeah, exactly.
Stick around,
mate,
buddy.
Right?
Stick around.
Yeah, so
right,
let's I'm gonna go ahead and sorry, I had to make some adjustments on the show. Gentlemen, I'm gonna let you take over. I want to say thanks everybody for listening in, and sorry Dick, I'm gonna step out. So
cool.
You're left in good hands, buddy.
Don't
worry. Because I'm going to give you a chance right now, Dick, to tell me why on a day like this with cable making new recovery highs and now lower on the day, give me all the fundamentals that reinforce the bear case for me. Okay.
I'm actually not going to reinforce the bear case to start with. I think actually we're going to see it pop a little bit higher, up towards 124.5. I think the previous highs, it keeps touching 124.45, I think, in my head over the last 3 or 4 months.
Yeah, this little double top up here.
Yeah.
Dick. Yeah.
So I think we're going to test again. And just, I don't know what's going to drive it. There might be month-end flows, because I think in the next few days, we're just going to see month-end, year-end, everything end before April the 1st, and we get back joking again. I think it's going to be driven higher up to there and then start reversing back. Now, fundamentally, I think that there's a few questions about the dollar. We're really being driven by risk at the moment more than anything else, more than by any sort of fundamental economics. And I guess at the moment, people are saying that the dollar, US banks look a little bit shakier than UK banks, and surprisingly, Euro banks. So I'll come back to Euro banks in a minute. I think that's just driven the sentiment and driven sterling a little bit higher. But having said that, I think that we in the UK have some fundamental problems that need to be addressed. We've got very, very high inflation, much higher than the States, much higher than Europe, and a Bank of England which is waffling, or a central bank that's waffling and not acting decisively. So I'm looking to I wouldn't get short yet. I'm still looking for it to poke up a little bit and then get short on the basis that you've got a central bank that's not consistent in its approach, and also you've got political risk in the UK, which I'm not sure people are picking up on yet.
Okay, you're not hearing a lot, even though you had 6 presidents in a few years, right?
Yeah, that's not enough for us. We want some more.
All right.
We want more. We want more.
So what's on the front? Do you feel that the UK has solved their pension problem with that panic day? I mean, because that's what Treasury papers what took down SVB. How
pretty similar, do you think?
Yeah,
in a way?
And doesn't every pension fund own debt from a year and a half ago? When rates were at civil war rates. Yeah, those were the lowest rates in, I think, 160 years.
Since I started in the market.
Yeah, when you were a runner on the floor.
When I was a mere lad. and God was my boss.
So, do you have a view that do you think, like everyone's saying, Credit Suisse and everything, that in a week everything's contained and the liquidity crisis is over? Because the next stage would be the credit crisis, right? Insolvency.
Yeah. So absolutely. Yeah. Everything's solved in a few days. Of course it's not. I just think it's we're in fantasy land. People believe that. I think there are other banks in trouble, certainly in the US. And logically there must be, when you've had such a quick rise in interest rates. Yeah, there must be other problems.
Why was the tipping point a couple weeks ago instead of a couple of months ago, or not yet?
God
I mean,
knows.
it's interesting how, what should have been obvious, no one talked about until it happened.
Yeah. I've no idea. You never can really pinpoint why something happens. I guess I've no idea why that particularly happened then. But I still think that I do think you're going to see it again. I think that you pump money into the system for so many years now, trying to solve a problem which you haven't solved. You've actually created an even bigger problem. You've tried to float assets and keep assets afloat which shouldn't have been afloat. You've inflated them to such a level that you've got to burst the bubble for them to collapse. And I think that something's going to get broken. It's going to hurt.
Okay. Would that bode? Do you think that the dollar has lost its, I don't know, haven status? Because, we had one strong day in the dollar during that event, and look, cable's taken out that high. Euro hasn't taken out the high yet, but cable has.
And I think that, it's interesting that because out of the three segments, the dollar and the US and Europe have got the weakest banking. The way I look at it, they've got the weakest banking systems compared to the UK, and that probably justifies why the UK is held up here. I still fundamentally, I think the Fed is right, but you've got some divergence in central bank policy. You've got the ECB being pretty aggressive here. And I think that might be why the dollar's lost some of its luster. I actually still think of it as a safe haven currency.
Okay. So Europe had great weather this winter, and
that's
natural
relative.
gas. Well, I mean, wasn't the narrative that everyone was going to freeze to death and starve to death in Europe this year?
Yeah.
Okay.
It actually did have a very mild winter. But funnily enough, that has its own problems because it's been pretty warm down in southern Europe. I'm sure that Stelios will fill us in on that if he's still around. And that's affecting some of the crops coming out of southern Spain, which feeds the north and feeds the UK in terms of salads and etc. Why anyone wants to eat salad in the winter is beyond me. I mean, I just think that's sort of food that food eats, but people apparently like lettuce in the winter. But that's pushed up prices over here. So you've had a lot of food inflation. It's 17.4% food inflation in the UK. It's unbelievable.
You bring up food. You ever trade things like ag commodities in your career?
Not. I did many years ago when I was at Refco when first started.
Refco, of
back
course.
In. Yeah. And I used to do the sit on the desk at night and do the late runs and do. I found it really interesting. Trade OJ, orange juice, and soya beans and whatever. And I learned all sorts of weird and wondrous things. Like there was a current that flows off Argentina, which takes all the anchovies out to sea.
Oh yeah, you're talking El Nino, La Nina.
Yeah. That pushes the price of soya up.
Yeah,
is that right?
That's happening this year. We've been in La Nina for about 3 or 4, and that's intensified the drought in the west. But you've had good crop conditions because it's El Nino that has a tendency to cause droughts in the breadbasket during the growing season, and that's happening this year. So
I found that really interesting. So it's probably the first time I started looking at weather and thinking about weather and markets. Yeah, before it was, shoot, I'm wet. Am I going to keep the seat of my motorbike dry? Get a runner to go and sit on it, which I used to do. But it suddenly made me appreciate how weather affects the markets and affects oil, and oil affects currencies and whatever. So it was an interesting learning curve. It's probably as interesting from the people who are trying to get fills out of me.
Yeah, well, and the Fed can't print corn.
That's true. It would if it could, though.
Yeah, So, so what do you think about how Paul left it? Do you think they're done?
Sorry, how?
Do you think that Paul and his tightening cycle is over, or there's another?
No, no,
Okay. How
I
much
don't.
higher? How many more rate hikes?
I don't know how many more. I'm really out on the limb here. I think we'll see at least 6%, and then they'll
10-year?
hold it there. Yeah,
On the 10 on terminal rate, 6%.
terminal rate 6%.
Okay.
And I think they'll hold that for longer than people expect. And I was talking to Blake about it last night. I actually sent him the chart that someone extrapolated what Volcker did back in the 80s when it went absolutely loony. But if you extrapolate the same movement now by Powell, the terminal rate is 7.5%. And with all due respect, Dale, you probably remember the period of inflation in the 80s the same way as I do.
I do.
Once it's in the system, it's really, really hard to get out,
Yeah.
Although
Took several attempts.
Didn't it? Yeah. And I think that you might see, I guess the Fed may well pause in May, and that might well be seen as the first attempt and a failure. Then I think it could come back into the system. I hope I'm wrong.
Interesting. Yeah.
And interesting that the US is very different to the UK and Europe, the profile of inflation. I mean, over here, it's just bonkers. But I wonder if the real solution will be that the Fed has a new target and says our target's 4% now, not 2%.
Okay. Yeah, that would be a way out.
Yeah.
How do you manage that and a banking crisis globally? And I read an article by a Fed guy, and he talks about the Ameridollar, and he talks about all the dollar deposits in Europe.
Yeah.
And the Fed can't bail it out. They're maxed out at that 60 billion, which happened to be taken that day.
Pretty damn quick.
They were like guys in the pit. Yeah. So
bid over.
They went over the offer to get it. So is there any narrative? Are you hearing things like that back over there about dollar deposits being at risk?
No,
not at all. Huh?
No, I haven't heard anything.
Okay.
But of course, there's more demand for dollar because interest rates are higher and repayments have to be high. So you've got to create more dollars to make your repayments. And most international loans are in dollars, so it's almost like a vicious circle.
The milkshake theory.
Yeah.
You like milkshakes?
I love milkshakes.
Yeah. So Brent Johnson, I'm playing on those words, but I do too. I like malts too. So what do you think about what's been happening in, for example, some of the commodity currencies? You have a view?
Yeah.
The Aussie's been really lagging.
Yeah. I think the perception is that inflation is a bit more under control in Australia than it is elsewhere. It's a difficult one, isn't it, the Aussie, because it's so much influenced by China. I think China's got this, I'm going to be politically totally incorrect, so no doubt you'll beat me on this, but they've got this unholy alliance with Putin now. And I'm not sure that they had the best interests of the West at heart to be generous to them. I think that should play on the Aussie. It's a really difficult one. Like, look at the Looney's difficult to read as well, isn't it?
Yeah. I mean, it doesn't trade like it used to. There are days when the dollar's weak and USD CAD is higher. So, it's kind of has its own rhythm.
Which is bizarre. Why do you think that is?
I don't know. I mean, you could see days where the Aussie and the CAD are moving in the same direction. When one should be down, one should be up, and they're both up.
Yeah. Do you think that's because people are lumping them together as commodity currencies?
It's everything's a new regime. It feels like, new regimes, and people are having a hard time trading this kind of action.
To me, you've got a choice between, and the central banks are between the devil and the deep blue sea here. You've got a choice between financial stability and controlling inflation.
Yeah.
How you balance that, huh?
That's the $1 trillion question.
Yeah, and maybe you're seeing strange movements in currencies because you've got certain traders going to say, okay, financial stability, that's a really important one. I will trade off that fundamentally. And on the other side, you've got people saying inflation's an important one. I'm going to trade off basically off interest rates. I would veer towards inflation being the overriding importance over financial stability,
which will exasperate the potential of having stability, because that's creating even more stability, more of a drawdown on the weak assets they all have on the books. So, fighting inflation exacerbates a financial crisis, a banking crisis.
Then you get into
a toxic cocktail, man.
Well, it is, and then you start looking at commercial property and commercial real estate, which is, excuse my language, a shit show. But how much exposure do banks have to that, and how are they ever going to get out of that with looking street smart?
Yeah, I read something by someone on Twitter who covers that beat, and they call it CRE money, and the models were all priced at 0 rates or 1%, and there's so much on the books. There's so much on the books that she actually believes that could cascade into a world banking crisis because the numbers are so enormous.
I think that to me is the next pillar.
That's a solvency issue after the liquidity issue is solved. I mean, Blackstone is walking away from trophy buildings.
Yeah.
Okay, and they needed a rescue and a partner to come in, I don't know, about a year ago, when there were all those people that wanted remittances. They wanted redemptions, and they couldn't cover it, and they found a partner that helped stabilize them. And they're the biggest.
And would they find one now?
Huh?
And would they find a partner now? Probably not.
Well, maybe if they went down, there'd be more housing on the U.S. market, because firms like Blackstone gobbled up all the homes that people were foreclosed on, and then rented them back to them.
Yeah, it's just shocking.
At ever increasing rates.
Yeah. Makes you quite
couldn't happen to a nicer bunch of guys. Snidely whiplash.
Yeah. And of course, President Trump had no exposure to commercial property whatsoever, did he? Or Deutsche Bank financing it.
Oh, yeah. Anyway, we're living in, Dick.
We shouldn't even be going there.
We've seen a lot, a lot of cycles, right? But can you ever remember one that's closer to a Twilight Zone episode than what we're living through now?
Absolutely not. I've been trading since 1973, right? And in the last 15 years, you've seen a pandemic, you've seen a banking crash, a pandemic, start of World War III. You've seen Credit Suisse, a top 30 bank, going. What more are you going to get? And you've seen everything sort of compacted down into a space of 15 years. You've seen interest rates at 0, which I never thought you'd see. You've seen people talk about negative interest rates, which to me is the biggest load of baloney ever. And now you're seeing them back towards reality. It's just like everything's speeded up. You say when you get older, everything speeds up. But boy, this is a bit too fast.
Yeah, this guy Toffler wrote a book called Future Shock in the 80s. Yeah. And it's because you're bombarded with so much information, sends you into mental comatose. What I'd like to know is, with your bearishness, and why don't we wrap it with it?
Yeah.
The eventual trade, do you think it's going to be risk off when the pound starts heading down, or is it going to be the domestic political uncertainty? Is it going to be, BOE only won a quarter? Are they going to relent? What's going to be behind the pound decline, and how far do you think it could fall to?
Right. 118.50 in reverse order.
Oh, okay.
There we go.
Yeah,
a little drop.
Where it was.
Where was the previous lows? 118.
118 even.
Yeah.
Last week.
So let's not get greedy.
Okay.
So let's go for 118.50, which is a nice
Boy, is that going to be an important area, because I think if we get back down there, eventually we're gonna take it out. And just that
you
range,
could well do. Yeah.
And just this range, Dick, 118, call it 700 pips, right? From from 1 to 118 gives you 111, which happens to be 61.8.
Yeah.
Anyway, just a little notes for Pinkert, leaving you with a notes for Pinkert, buddy.
Yeah, thank you. As my mother used to say, I could play the piano, got all the right notes, but in the wrong order. And I don't know what's going to be the thing that drives it. So we've got local elections here in May, and the Conservative ruling party are going to get their ass handed to them, well and truly. Whatever they think, they're going to get really punished. Sunak's still got problems over Northern Ireland. Northern Ireland is Ireland is a really difficult problem for any politician to solve, and arguably insolvable. And in lurking in the wings, you've got an angry Boris Johnson. So they've got all sorts of political problems. I wouldn't be at all surprised to see another push for a new leader of the Conservative Party, another prime minister. Why not? We haven't had one this year. So that's your political risk there. The other side of it, you've got the Bank of England, who are, without doubt, the worst central bank I've seen since I've been in the market, and the worst Bank of England. It's run by someone who's totally unfit to run a central bank. It's ruled by committee. I wouldn't be surprised they just left interest rates where they are. We're quite happy. Inflation's 10.5% here. Generally, food inflation, I say 17%. They need to jack rates up. They daren't, because the housing market and real estate goes back to the financial stability, I guess, in a way.
Right. Because there are more floating rates, there are adjustable mortgages, because most U.S. citizens have locked in 30-year rates at 3.
Yeah, most UK are around about 2 years locked, and a lot of now, if you think the rate hiking cycle started 2 years back, so they're just coming off now, which hurts. So you're either going to get a totally incompetent move by the Bank of England, who's, I don't know if you saw yesterday, he's paying people who'd retired early for the rise in inflation. It ain't anyone else's problem apart from the central banks. They printed too much money. End of story. Made a little bit worse by COVID. Made a little bit worse by the war in Ukraine. But it's the central banks who created the problem. So, whether it's political uncertainty will start it, or whether it's a weak Bank of England will start selling, one or the other will. And so that's one of those will be the trigger point to me.
Okay. So you heard it from Dick Matthews, and Dick really enjoyed talking to you. Same generation, different parts of the world, and
same croaky old voices from floor traders, though.
Yeah. So appreciate you sharing your views.
A pleasure
with us today.
Absolute
and
pleasure.
Interesting to talk to a guy who has a sense of history and what it means for what we're going through today. So
great.
You can't learn experience. It only happens with the passing of time and living through stuff, right, buddy?
Absolutely. The trick is remembering it. The viewers here are looking at about 300 years worth of experience right now.
Oh, steady.
Oh, come on.
Get him out of the chat room.
It is. All right. So from one dinosaur to another, keep one leg out of the tar pit. Okay, buddy? Keep one leg out of the tar pit.
Catch
All
you
right.
soon, Dale. Cheers, Dale.
All right,
Bye.
Dick Matthews, everybody. Adios. Fun, compelling, and fun, buddy. It's a great combination. Thanks again, Dick.
See you guys.
All right, see you guys. See you, Ryan. Thanks for sticking around to be an interpreter.
I'll catch you soon, Ryan.
We didn't need you.
Yeah.
We didn't need you, but I felt more secure knowing you were there.
Exactly.
All right, buddy.
I'm going to jump as well. Catch you soon. Cheers now.
See you, brothers.
Cheers,
Adios.
bye.